The paper gold illusion. For every single ounce of physical gold that exists in bank vaults right now, there are over 100 ounces of paper gold being traded on markets. Let that sink in. You have been buying promises, not metal, and they designed it this way. Wall Street discovered decades ago that controlling physical gold was expensive and inefficient, so they created a shadow system, a parallel universe of gold that exists only on paper, only in contracts, only in promises that can never all be fulfilled at once. They call it the futures market. They call it ETFs. They call it efficiency. What it really is the greatest illusion ever performed on retail investors. When you buy most gold investments, you're not buying gold. You're buying a claim, a derivative, a piece of paper that says someone somewhere might have gold that might be yours if everything goes perfectly and everyone plays by the rules. But here is the dark secret they never tell you. Everyone cannot claim their gold at once. The system would collapse. There is not enough physical metal to honor every paper promise. This is not a bug. This is the feature. Because when gold only exists on paper, they control the supply. They control the price. They control you. You thought you were protecting yourself with gold. You were actually entering their casino, playing by their rules, with their loaded dice. Every time you checked your gold ETF and felt safe, you were feeling exactly what they wanted you to feel. Secure, protected. Holding an asset they can manipulate at will. The paper gold system lets them create unlimited supply of something that is supposed to be scarce, and you never questioned it. But the paper illusion is just the foundation. Wait until you see how they use it to manufacture panic and steal your positions at the bottom. Section 2. Manufactured panic cycles. At 3:47 in the morning, when you were sleeping, someone dumped $4 billion worth of gold futures onto the market in a single minute. The price cratered. Stop losses triggered. Retail positions liquidated. And by the time you woke up, they had already bought everything back at a discount. This is not conspiracy. This is documented. It happens with disturbing regularity. They call them flash crashes. They call them technical anomalies. What they actually are is coordinated psychological warfare designed to shake you out of your positions at the worst possible moment. Think about it. Who sells $4 billion of anything at 3 in the morning when markets are thin and prices are worst? Someone who does not want the best price. Someone who wants the biggest impact. Someone who wants to trigger your fear response while you cannot even respond. They have studied your psychology. They know exactly where your stop losses sit because your broker's data feeds into their systems. They know the price levels that will trigger mass liquidation. And they hit those levels with surgical precision during the hours when retail investors are offline and institutional algorithms are in control. You set a stop loss to protect yourself. They use your stop loss as a target. You thought you were being responsible. You were actually painting a bullseye on your position for them to hit whenever they want to accumulate cheaper. The panic is never organic. The panic is engineered. They create the fear, harvest your positions, and reverse the price before you can even react. You wake up, see the damage, and tell yourself the market is just volatile. You never realize you were specifically hunted. This manufactured panic requires a delivery system, and that system is everywhere you look for information. The media manipulation machine runs 24 hours a day. Section 3. The media manipulation machine. The headline hits at exactly 9:31, 1 minute after market open. Gold is dead, experts say. The narrative floods every financial news outlet simultaneously. Identical talking points, identical expert guests, identical conclusion. Sell now. You think you are reading news. You're reading a script. The financial media does not report on markets. The financial media is a tool for moving markets. And you have been consuming their programming your entire investing life without ever questioning who writes it and why. Follow the money. Who advertises on financial networks, banks, brokerages, institutions? Who are the expert guests? Former bank executives, current fund managers, people with positions they need you to buy or sell. The financial media is not journalism. It is an influence operation with a business model. They have perfected the art of manufacturing consensus. When they want gold down, suddenly every channel features bearish analysts. When they want gold up, the narrative shifts overnight to safe haven buying and inflation fears. The opinions change, but the coordination never does. You thought you were making informed decisions. You were making programmed decisions. Every fear you felt about gold, every moment of doubt, every urge to sell at the bottom or buy at the top was implanted through carefully crafted narratives delivered by trusted-looking faces on screens you watch every day. The talking heads do not predict the market. They prepare you psychologically to be on the wrong side of trades that institutions are already positioned for. By the time you see the narrative, the smart money has already moved. But human-delivered narratives are too slow for modern manipulation. They have upgraded to something faster, something that reads your emotions in real time and trades against them. Section 4. Algorithmic Emotion Harvesting. Right now, as you watch this, algorithms are scanning millions of social media posts, news articles, and trading forums to measure exactly how retail investors feel about gold. They know when you are scared. They know when you are greedy. And they trade against your emotions before you even finish typing. They call it sentiment analysis. What it actually is the industrialized harvesting of human emotion for profit. Every comment you make, every search you perform, every article you click becomes data that feeds systems designed to take the other side of your psychological state. When fear peaks, when retail sentiment toward gold hits maximum negativity, their algorithms automatically begin accumulating. When euphoria peaks, when everyone is bullish and posting rocket emojis, their systems begin distributing into your buying. They are not trading gold. They are trading your feelings about gold. The algorithms have no emotion. They cannot be manipulated. They cannot be scared out of positions at 3 in the morning. They do not read headlines and panic. They read your panic and profit from it. You're bringing a human brain to a fight against systems specifically designed to exploit human brains. Every technical indicator you learned, every pattern you follow, they know them too. They know when retail traders will buy. They know when retail traders will sell. And they position themselves milliseconds ahead of your predictable behavior to extract maximum value from your every decision. You're not trading against other investors. You're trading against machines that have modeled your psychology and weaponized it against you. But even algorithms need a framework to operate in. And that framework is set at the highest levels of global finance, where central banks coordinate in ways you're never supposed to see. Section 5. Central Bank Coordination. In a secure room that most people do not know exists, representatives from the world's largest central banks meet regularly to discuss gold, not to protect it, to manage it, to ensure it never threatens the paper currencies they print. Gold is the enemy of unlimited money printing. It is the historical measure of currency debasement. It is the truth that makes their lies visible. And they have spent 50 years building systems to suppress that truth. They do not announce when they sell gold to control prices. They do not hold press conferences about leasing gold to bullion banks who then sell it short. They operate in darkness because sunlight would reveal the coordination. You're not supposed to know that your government actively works to suppress the one asset that would protect you from their monetary policies. Central banks claim gold reserves they have not audited in decades. They lease gold to banks who sell it multiple times over. They intervene at critical technical levels to prevent breakouts that would trigger momentum buying. Every time gold threatens to expose inflation or currency weakness, invisible hands appear to push it back down. You thought gold was a free market. It is the most managed market in the world. It has to be, because if gold were allowed to trade freely, it would reveal exactly how much value has been stolen from your savings through money printing. It would show the true cost of every bailout, every stimulus, every dollar created from nothing. They cannot let that happen. So they manage gold the way they manage everything. Secretly, coordinated, and at your expense. Central bank coordination sets the strategy. But the actual suppression happens through a specific mechanism most investors never understand. The futures market is their weapon of choice. Section 6. Futures market suppression. They do not need to sell a single ounce of physical gold to crash the price. They just sell contracts, promises, paper. And because the paper market is 100 times larger than the physical market, paper wins every time. The COMEX futures market is where gold prices are set, not in mines, not in jewelry stores, not in vaults. In a casino where you can sell gold you do not own, have never owned, and never intend to own. They call it price discovery. It is actually price control. Watch what happens every time gold approaches a key resistance level. Massive sell orders appear out of nowhere. Not gradual selling, not profit-taking. Walls of paper gold slammed onto the market with one purpose: to trigger technical breakdowns and stop out retail positions. They can sell more gold in a single minute than is mined in an entire year. They can create unlimited supply of something that took billions of years to form in exploding stars. The physics of scarcity mean nothing when you can conjure infinite paper substitutes. You bought gold because it is scarce. They sell paper gold that is infinite. Your fundamental thesis is correct. The market structure they created makes your thesis irrelevant. They have separated price from reality and trapped you in a game where they write the rules. Every time you wondered why gold did not respond to inflation, to currency collapse, to obvious reasons it should rise, this is why. Paper supply absorbs physical demand. The price lies to you because they need it to lie. Price suppression keeps you confused, but the deeper manipulation is psychological, a constant swinging between two emotional states they control completely. Section 7. The Fear-Greed Pendulum. They have turned your emotions into a metronome, swinging predictably between fear and greed, and they profit from every swing. When you are fearful, they buy. When you're greedy, they sell. You're the clock. They are the clockmaker. Think about your gold investing history. Remember the moments of maximum fear, the crashes, the panic headlines, the urge to sell everything. Those were the exact bottoms. Now remember the moments of maximum greed, the euphoria, the predictions of gold to 10,000, the fear of missing out. Those were the exact tops. This is not coincidence. This is engineering. They create the fear with manufactured crashes and bearish media. They create the greed with controlled rallies and bullish narratives. Then they harvest both extremes while you swing between them, always buying their tops and selling their bottoms. You cannot control your emotions, but they can control the stimuli that trigger your emotions. They control what you see, when you see it, and how it makes you feel. Your fear and greed are not random. They are inputs they manipulate to generate the outputs they want. Every time you told yourself you would be different, you would not panic, you would not chase, you did exactly what they expected. Because they have been studying and exploiting human psychology for longer than you have been alive. Your brain is running ancient software. Their manipulation is cutting edge. The pendulum keeps swinging because they keep pushing. And they have an army of trusted voices to tell you which way to lean at exactly the wrong moment. Section 8. Analyst Gaslighting Tactics. The analyst appears on screen with impressive credentials and a confident tone. Gold is overvalued, they say. There is no reason to own it. Inflation is transitory. And you believe them because they seem smarter than you, more connected, more informed. They are lying, not accidentally, professionally. These analysts work for institutions that have positions opposite to their public recommendations. They tell you to sell what they are buying. They tell you to buy what they are selling. It is legal. It is documented. And it happens every single day. This is gaslighting on an industrial scale. When gold rises, they tell you it is a bubble. When it falls, they say they told you so. When it rises again, they say it is temporary. No matter what gold does, the narrative is always that you should not own it. Ask yourself who benefits from that narrative. They call their lies analysis. They dress their manipulation in charts and models and sophisticated language designed to make you feel stupid for trusting your own judgment. The goal is not to inform you. The goal is to make you doubt what you can see with your own eyes. Your instinct says, hold gold when currencies collapse. Their analysts say, sell. Your instinct is right. Their analysts need your selling to profit from their buying. The gaslighting exists to override your correct instincts with their self-serving lies. Every time you felt uncertain about gold, every time you wondered if maybe the experts knew something you did not, you were experiencing their gaslighting working exactly as designed. But the manipulation does not stop at psychology. They have built structural traps into the market itself, traps designed to lock you in at the worst possible moments. Section 9. The Liquidity Trap. You own gold. You want to sell at the exact moment everyone else wants to sell. And suddenly, there are no buyers. The spread widens. The price gaps down. You watch helplessly as your position is liquidated at prices far below what you expected. Welcome to the Liquidity Trap. They designed markets with asymmetric liquidity. When prices are stable and you do not need to sell, buyers everywhere. When prices crash and you desperately need to exit, buyers vanish. This is not accident. This is architecture. Market makers, the institutions obligated to provide liquidity, step back during crashes. High-frequency traders, who normally provide tight spreads, turn off their machines. The very entities that profit from your trading in normal times abandon you precisely when you need them most. You cannot sell at a fair price because there is no one to sell to. And by the time liquidity returns, the damage is done. Your position was liquidated at panic prices. Their positions were accumulated at panic prices. The trap worked perfectly. They have the technology to see your positions, your stop losses, your margin levels. They know exactly where the forced liquidations will trigger, and they structure their trading to ensure maximum damage when the cascade begins. You thought markets were fair, that for every seller there is a buyer. Markets are hunting grounds where your exits are blocked when they want to feed on your positions. You have now seen the full system of manipulation, the paper illusion, the manufactured panic, the media machine, the algorithms, the central banks, the futures suppression, the emotional pendulum, the analyst gaslighting, the liquidity traps, every piece designed to extract wealth from you, but now you know, and that changes everything. Section 10. Becoming manipulation-proof. They built this system assuming you would never understand it. They perfected these tactics expecting you to remain blind forever. They have profited from your ignorance for decades. But today, in the last 90 seconds of this video, you become something they fear. You become aware. Awareness is their enemy. Every tactic you have learned today loses power when you recognize it. The manufactured panic cannot shake you out if you know it is manufactured. The media narrative cannot program you if you see it as programming. The emotional pendulum cannot swing you if you stand still. From this moment forward, watch the gold market differently. When you see flash crashes at 3 in the morning, you will know what is happening. When you see coordinated bearish headlines, you will recognize the script. When you feel the urge to panic sell, you will question who benefits from your panic. You cannot beat their algorithms. You cannot outtrade their systems, but you can refuse to play their game. You can hold physical metal they cannot manipulate. You can ignore their narratives. You can be the patient investor who does not react to their manufactured stimuli. They need your participation to profit. They need your fear, your greed, your panic, your euphoria. Deny them your emotional responses, and you deny them their power over you. You walked into this video as a target. You leave as someone who sees the hunters. That awareness cannot be taken back. Once you see the manipulation, you cannot unsee it. You become dangerous. Not because you will fight them, because you will no longer feed them. Remember what they did to you. Remember how long they did it. And remember that now, finally, you understand. The next time they come for retail investors, you will be watching. You will be ready. You will be the one they cannot manipulate. Welcome to the other side. Welcome to Dark Aware.